Hey everybody, this is Tim Dial with Nexa Mortgage, and I wanted to go over some information really quickly regarding the Tennessee Housing Fund. At Nexa Mortgage, we are the largest mortgage broker in the country, and we partner with the largest wholesale lender in the country, which is United Wholesale Mortgage. We do more loans with them than anybody else, and we partner with United Wholesale Mortgage to offer customers the housing fund down payment assistance here in Tennessee. So I wanted to go over some of that information really quickly because a lot of people don't understand it or don't know very much about it. Maybe a lot of people haven't even heard of it. And we have many down payment assistance programs available, but if you're in the state of Tennessee, this is kind of where we start. And that's because this is sort of the best program offered in Tennessee. It's better than any of the lender specific programs if you do qualify for it. So that's kind of where we started. If for some reason you don't qualify for it, we do have other programs available that can certainly be helpful. And so we kind of start here and then see if you qualify. And if it doesn't look like it's possible to go that route, then we can look at other options that don't have as stringent requirements as the housing fund. So anyway, I wanted to get into that a little bit. I'm going to share a screen with you here and get into this a little bit more. And I'm also going to share a housing fund video, or at least a part of the housing fund video that's on here. And that's because I think it's just the easiest way to go instead of me just trying to reiterate the information that they provide through their video. So, all right, I think you should be able to see my screen here. This is the housing fund video. They put this video together in 2023. As you can see here, some of the information in it is not accurate anymore. So I'm going to try to skip over those parts. And I'm only going to cover the down payment assistance portion of the video because they do offer other programs as well. So I'm going to go ahead and start playing it. You should be able to hear this in the audio. Let me turn up the volume a little bit. See if that helps with you being able to hear this okay. So I'm going to go ahead and play this, and then I will skip over the parts that they get into, like the income requirements and stuff like that, which have been updated since. And they also get into what the interest rate is on the second mortgage, which has also been updated since. So I'm going to skip over those parts. Hang on just a second here.
My name is Holly Bowman, and I will be going over the Housing Fund's 3 homeownership programs. The Housing Fund's programs are Down Payment Assistance, the Community Land Trust, and Shared Equity. A little bit about the Housing Fund is that we are a private nonprofit community development financial institution. Our mission is to create and maintain affordable housing through low interest loans and grants. The first program that we'll be talking about is Down Payment and Closing Cost Assistance. This program is available all across the state of Tennessee. Through Down Payment Assistance, the Housing Fund offers loans from $5,000 to $35,000 to help with down payment and or closing costs. These low interest loans are paid over the course of 10 to 15 years. The term of the loan is dependent on the amount that you borrow. So if you borrow from $5,000 to $10,000, it is a 10-year term. If you borrow from $10,001 to the full $35,000, it is a 15-year term. Payment assistance, we require a minimum credit score of 600. You have to complete a THGA approved homebuyer education course. We do provide a link through eHome America, but anything that is THGA approved and has been completed within the last year counts towards that requirement. You cannot exceed a 45% debt to income ratio, no collections, judgments, or charge-offs within the last 12 months, no 60 or 90-day delinquencies, and no more than 2 total delinquencies in the last 12 months. The exception to all of that is medical, and then everything just has to be paid in full by closing. Finally, you do have to be on your present job for at least 120 days, unless you are working within the same field. We also serve up to 120% of the area median income. For this program and all.
Okay, so here's where I'm going to kind of skip forward a little bit because because this information's changed. These numbers have gone up since 2023. They actually have this same chart with the updated numbers on their website. So not really any reason to go through this chart right now since they have the information updated. I'm going to skip forward a little bit and get past this. See where they go from here. Okay, and this is kind of where I wanted to go. Let's see if I can make sure I'm at the beginning of this. I think this is probably pretty good.
How to get started into the closing table for down payment assistance. So for this program, you are first approved for a first mortgage and you go under contract with that specific home. After you're under contract, you'll let your lender know, I want to use the housing fund for down payment assistance. They will then submit your application and all supporting documentation to the housing fund directly. Once we receive all of that information, we process that within 5 to 7 business days. After that, the lender will receive the approval with the loan estimate. The title company receives the closing instructions and the loan estimate from the housing fund. The title company creates the second mortgage closing disclosure. You receive that and acknowledge 3 days prior to closing, and then the housing fund wires the funds directly to the closing table. We do also offer a home buyer down payment assistance loan. This is all of the other requirements we just discussed with 2 extra requirements. You do have to be located in Davidson County, and you have to be under 80% of the area median income. For these loans, it's from $5,000 to $10,000, and there is a $0 monthly payment, 0% interest, just due back to the housing fund when the home is sold.
Okay, so that's kind of where I wanted to go with this and what I wanted to cover. They start getting into some other types of programs that they have available, and later in this video, other than the down payment assistance. I just wanted to kind of cover the down payment assistance on here. And if you go back to this DPA guidelines chart, some of this, I think most of this is still the same. The one thing that they didn't put on here is that they do require that the buyer put in at least 1% of their own funds, and they want to make sure that you have some skin in the game, I guess you would say. So just to give you an example, if you're buying a house that's $300,000, they're going to provide you with down payment closing cost assistance, but you have to provide at least 1%, which would be at least $3,000 of your own funds toward that purchase. And so that for some people can be a little bit of a curveball. If you think you're not going to be able to come up with that, then we have to look at a different down payment assistance program. Additionally, some of these other requirements could also make a difference. Like, for instance, 45% debt to income ratio max. Normally FHA will, in some cases, let us go to like 56 or so percent, right? And so this limits how much you can afford to some degree. And as a result, it could make sense, if we can go higher, it could make sense to get you into a different down payment assistance program if the 45% isn't going to be enough for you to afford the house that you want or need. So that could be a part of it as well. And then some of this stuff with collections and judgments and charge-offs and stuff like this, some of these requirements down in here are a little bit more extensive than some of the other down payment assistance programs. So if this knocks you out of it, we'll look at your credit to see if it does. But if this knocks you out of the housing fund, then we can look at other down payment assistance programs and get you into something else that would work better for you. The big difference here is that right now the down payment assistance that they offer is basically a 5% second mortgage. 5% is the lowest that I know of. None of the lenders offer something that low. The way most lenders do it that offer a down payment assistance program is the interest rate's a little higher than what this would be. This just uses a regular first mortgage through a partner lender like United Wholesale Mortgage. So just as an example, right now you would probably get something in the neighborhood of 6 to 6.25%, something like that on the first mortgage, 5% on the second. If you were doing this through a down payment assistance program with one of these other down payment assistance Lender specific programs, you might be at 7.5 to 7.75 on the first mortgage, and then they usually charge 2% higher than that on the second. So you'd be at like, probably like 9.5 to 9.75 on the second mortgage. And so as a result, the housing fund will allow us to have a lower payment for you, and will make a lot of sense if we can get you into that program and get you approved on that program because you meet these guidelines. If they don't, like I said, we can look at the other program. Payment will be a little bit higher, but at least you can get into a house. And the key there is, it's more important to be able to buy the house. Then we can always refinance it later and get you out of that higher rate, right? But once you buy the house, then you start building equity. And that's really where you make your money. I always think of this, especially for first-time buyers. You should always think of buying a house as an investment more than anything else, because that's where you build your wealth in this country, is through home ownership. And a lot of people don't realize that. But just to give you an example, we bought our house in 2005 for $250,000. Our house is worth over $550,000 today. So, I haven't saved $300,000 in the bank, but I have $300,000 in equity in the house, right? And even more than that, because you actually pay the mortgage down as you live in it. So you actually grow equity faster because you're paying the mortgage down while it's increasing in value, and you end up with even extra there. Whereas if you're renting, all of your money is just basically is like flushing your money down the toilet because you don't have anything to show for it if you're renting. So the key here is to get you into a house as soon as possible. That way you start making those equity gains. As you gain equity over the first couple of years, we refinance you out of the higher rate into a lower rate, lower your payment, and that allows you to gain equity that much faster, because more of your funds are going toward the principal if we get your rate down, right? So anyway, that's kind of how that works. I wanted to cover that really quickly here, get into a little bit of that. I didn't want to spend a huge amount of time on it, but a lot of people are not really familiar with the housing fund. And if you are in Tennessee and looking to purchase in the state of Tennessee, then that's really the first place to look for down payment assistance. Is we go to the housing fund first. Like I said, we partner with United Wholesale Mortgage as they offer that program. They have processors that are very familiar with it, so we just use their processing, and they make sure everything looks good. And then we go to closing within like a month, and that's how that works. The other thing too is when we're putting together a contract or helping a realtor put together a contract to purchase a house, you don't have to put the housing fund on there, right? You just have to put FHA, because we're using FHA. They don't need to know that you have down payment assistance, because that would, if they knew you were using a down payment assistance program, they may not accept your offer because they feel like that's more difficult, a more difficult process, more difficult approval process, because there's this other entity that has to approve, not just the lender. So when we have people fill out the contract, you don't have to put that you're receiving down payment assistance. You just put on there that you're using FHA, and we kind of go from there. So anyway, I wanted to go over that really quickly. Like I said, didn't want to spend an immense amount of time on it, but I did want to make sure people were aware of the program, what the requirements are, and that this is the first place that we will start with down payment assistance. If that doesn't work, we have other programs, and we can get you into a different program. I have another program that I've used a few times. It's really great. It is a higher interest rate, and it's going to be a higher payment. However, they provide 5%. You get 3.5%. You get 3.5% that goes toward the closing costs. And then the other 1.5% that they're giving you goes toward, the 3.5% goes toward down payment. Then the other 1.5% they're giving you goes toward the closing costs. So then if you get the seller to cover some of the closing costs as well, you can end up with all your closing costs covered, get all of the money that you spent back at the closing. I had a guy who closed in 2024 using this program. He'd spent $600 on the appraisal on the front end. He'd also put $1,000 in earnest money on the property, or on the transaction through the contract. And then at the closing, he got the entire $1,600 back because we had the seller covering some of the closing costs, as well as him having that extra 1.5%. And then additionally, we still had funds left over. So on the last day, we saw how much money he had left over, that last day we went out and got him a 2-year all-inclusive home warranty for $1,300 that the seller paid for out of those seller proceeds, right? Out of the seller funds that we had already negotiated into the contract. We had those funds left over, so we got him a 2-year warranty for $1,300, and that means that anything goes wrong in the house, air conditioning, any of this kind of stuff, any of the appliances and stuff, he's going to have that covered through the home warranty for the first 2 years he's in the house. So that's a great extra benefit that he got. Very excited. And then, we'll probably refinance him. If not this year, we'll probably refinance him next year and get him and drop his payment by at least a couple $100 a month, which will be even more of a benefit for him. And by that point, he'll have probably, $10,000 or more in equity in the home. So I would say if it's next year, he might have closer to 20,000 equity in the home by then because of the way prices have been going. So anyway, wanted to cover that information really quickly. If you do have any questions or anything, certainly let me know. I'm always here to help. Thanks.